Is it blue skies for stocks through to the end of the year, even as interest rates move up?
We would agree with his assessment that stocks can do well and if rates will move up this year. I hope he's not correct on 150 basis points. That might be dramatic. What he's talking about is just rates returning to normal. We think that will take time. That'll take time for the Fed to get there. We're in the 4 raise camp this year. We think rates are going to be moving up, but we think financial markets can do well.
4 raises this year, Steve.
Yeah, so he's on the other side of that debate. The 3.5 gives us some are at 4, some are at 3. First of all, I'd like to say that Paul Tudor Jones is almost certainly right because he is a well-known fly fisherman and great conservationist, honored recently by the Bonefish and Tarpon Trust.
Not to mention a classmate of mine at the University of Virginia.
There you go. So there's a second reason he's right.
Is there a macro link between fishing and economics?
I'm about to make it. No, seriously. The idea that we would have higher interest rates will be fine for the market if it comes along with higher earnings and some of these growth numbers we have. The growth numbers that are expected are not dissonant with a Fed funds rate around 2.5% or 3%, with the question being, does the Fed get concerned and feel it has to break the economy and slow the economy?
Well, Mike, there's historical precedent for this, right? Go back to the 90s. Rising rates, rising stocks.
Absolutely. No, there's no doubt that they can coexist. I do think, though, it's instructive to see how we got to this point in this year, okay? The 10-year yield went from just over 2% Labor Day to 2.7 by the end of January. Everybody was very bullish about stocks. Stocks had gone high, and we were testing the limits of the stock versus bond valuation that has been in place this cycle. And it broke the market temporarily. We had that correction. We're mostly back from it, but not entirely. So I do think, while it makes sense to say this economy, this stock market can handle appreciably higher rates, the way we get there, how fast you get there, and I think the adjustments along the way are also going to matter. With all due respect to Paul Tudor Jones, whom I have no personal connection with of any sort, investors of his generation all believe this. They all feel that that rates are artificially low. They should be higher. 2% doesn't look right to them on a lot of these measures as a handle for bond yields. And so I do think there's a little bit of a long-term muscle memory at work. We saw what happens to this market in this cycle when you do get people thinking the Fed's going to overshoot a little bit.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.